If you look at the top 20 emerging market central bank gold holdings, what they would need to buy to just match G7 central bank gold holdings is 6 years of supply. It's 24,000 tons of gold.
Gold pinned to 4,200, silver roaring through $50.
This isn't a once in a 50-year event. This is sort of a once in a 100-year event.
You know, where people had 1 or 2% allocations to gold, and they're taking that up to 10 or 20% just within the span of a month.
What was the trigger for you guys?
I think it was when Russia invaded Ukraine.
Russia invading was the game-changing in the gold market.
What do you hope for, Nikki?
Can people talk to each other without being so triggered?
What's happening, good people? We are here to record Macro Dirt podcast number 68. We've got my man, Jared Dillian, and a special guest today, Ms. Nicky Shiels, Head of Research and Metal Strategy at MKS PAMP.
Yeah.
Thank you for joining us today, Nikki. How you doing?
Yeah, I'm good. How are you? How are you, Tony? How are you, Jared? Yeah, all good.
Old friend of Jared and mine, Nikki. It's great to have you here. You're one of the most accomplished students of the metals markets that I could find.
Mm-hmm.
And we are honored that you're taking some time from your trip. You're in Lake Como now, is that right?
I'm in Lake Como. I've been in better places. I'm joking. Yeah, no, I'm in Lake Como, which is great. So yeah, here for an offsite.
How beautiful. What brings you to Lake Como today? Can I ask?
Yeah, we have our internal offsite sort of once a year. Our production facility is about 30 minutes away. A lot of the Swiss refinery is actually based in this region. So yeah, we sort of, getting together, putting the heads together, trying to figure out the market, trying to figure out where we're going and where the company's going.
Brilliant. I wanted to introduce MKS PAMP to our listeners, as a physical metals trading shop that deals with banks, investors, jewelers, miners, founded in 1979 by Mahmoud Shakarchi. Mm-hmm. And the PAMP SA part is a world-leading refinery and mint-producing endeavor where you guys produce bullion, bars, coins, medallions, and the combined entity is one of the biggest trading shops in the world. Is that fair to say?
Yeah, very fair. Kind of hit on the head. In essence, we touch the physical markets, the entire supply chain. So it really has been all about physical, which we can get into. But some super interesting trends there.
Brilliant. Well, super interesting. I would say so, with gold pinned to $42 and
Right.
4,200 and silver roaring through $50. What are your thoughts, broadly speaking, on the metals markets right now, Nikki? We've spoken about it before. I remember one of the things that I said when I read one of your research reports was that I love everything you're saying. I just don't think you have a high enough price target. Do you remember that conversation?
Myself and every banking analyst or research analyst on the street, I think it's been a series of sort of trailing forecasts. No one is bullish enough, I guess. There has, what's kind of driving, $53 silver and 4,200 gold. It really is, for me, this isn't a once in a 50-year event. This is sort of a once in a 100-year event. I sort of wish for a pullback, like we really do sort of overdo. It's super frothy. We overdo about a 5 to 10% pullback to kind of restart. There hasn't been like one aha moment driving precious metals, but particularly led by gold. I think it's a sort of combination of, yes, it's a debasement trade, which is obviously the word du jour. Central banks are looking to diversify. There's that de-dollarization trend happening. And it's just a sort of buy everything market, right? Like stocks are hard, gold and silver. Like you get the feeling that there's just too much liquidity around, too much money. And, gold and silver is sort of going to take pole position, sort of internalizing that.
Yeah, that's a great point. Go ahead, JD. What were you going to say?
Yeah. So I was chatting with one of my subscribers today, and he said, look, anytime you have a commodity that doubles or triples, it's going to have a massive correction.
Right.
And what I was thinking of was cocoa, right?
Mm-hmm.
And cocoa ran up to 10,000 and it corrected back to 7,000, and it traded in a range for 2 years, and now it's kind of fallen apart. But cocoa and gold are very different because I think cocoa is really a supply story And gold is really a demand story. And the demand has just gone exponentially infinite in a short period of time, where people had 1 or 2% allocations to gold, and they're taking that up to 10 or 20% just
Right.
within the span of a month.
Yeah.
You know,
Yeah. No, you raised some good points because I think your sort of very typical commodities, 90% of price action is supply and demand, and you kind of fudge a little bit for macro. Whereas gold, in that sense, is kind of less of a commodity. It's more of it's everything. It's a fear gauge. It's a fiat currency. It's it's an interest rate proxy. So yes, commodities historically do sort of burst their own bubble and sort of shooting themselves in the foot in terms of, a $10,000 cocoa. And you're right that it has been a demand story in gold, but what makes this time different? It certainly is that push from demand, but we see it. We've seen it in every gold cycle. Is you normally see supply come back, you see producers, or you see scrap. And this time around, people are holding onto holdings. Like there is a legit fear, and I guess it's just been a one-directional trade for 2 years. But that scrap supply, which you historically see from sort of Southeast Asia and some of your big physical trading hubs, isn't coming back, and it's not capping the market. So you get some scary numbers when you start to put together. We're going from 1%, sort of allocation in equity portfolios to 20%, or central banks have to catch up to what developed market central banks are holding. And the demand side can be pretty, there's a lot of gold to buy. Let's just say that.
Yeah. Yeah, what do you think it was to both of you that really flipped the switch and turned on the debasement trade? If you had to go back and sort of say, you know what it was in my head when this happened or when that happened. What was the trigger for you guys? I'm really curious what you think about that.
I think it was when Russia invaded Ukraine.
Great point.
Yeah.
Because the U.S. put sanctions on Russia, and we locked them out of SWIFT, and we also seized 210 billion. They had treasury holdings in a U.S. account, which we seized. And every central bank around the world is looking at this and like, I can't have assets in the U.S. if the U.S. government could just like seize our assets. So we need to have something locally that we can hold within our borders that is remote from the reach of the U.S. government. I think that's what started it off. China has been, China is the big buyer. China has been buying relentlessly over the last couple of years. Every once in a while, they spoof the market lower. They say they're done buying, but they're lying. They're actually not done buying. So I think from 2000 to 3,500 has been central banks. And now that you have retail participation and, speculative activity, I think that's what's driven the last part of it.
Yeah. No, I definitely, I can't disagree. I do think that Russia invading was the game changing in the gold market. And you can see, you just look at a graph of, real interest rates versus gold, that correlation and has held for, 3-4 decades. And that sort of broke down, right when we sanctioned, the West sanctioned Russian assets. I think for me this year, the sort of acceleration of the anti-USA trade, the sort of let's diversify against US just stocks, bonds, but the fall of the dollar earlier this year sort of accelerated the thinking of, okay, right, we're going to short the dollar, but what are we going long? Like what fiat currency am I going long? And I think, you sort of just end up at gold because there's no real tangible kind of narrative for holding any other fiat currency. So it's just a debasement against all currencies, right?
Yeah, and I think also you've seen that chart where central bank holdings of gold are now above treasuries for the first time since 1996.
Mm-hmm.
Yeah.
I remember in the late 90s, central banks were selling gold.
Mm-hmm.
You had Gordon Brown, who sold all the UK's gold like in the two handle, like in the $265 an ounce, like sold all their gold.
Yeah, I've got a great chart that you're going to throw up, which is central bank gold holdings, which are now rising. And what's interesting is that they are rising to approximately, I'll call it about a third of the level that they were at in 1980.
Yeah.
So you kind of look at where this can go. and beyond, if treasuries are no longer the central bank hedge du jour,
Right.
and you say, oh man, this can go to the top of that and more,
Right.
right? Like if this is a game changer and now we're talking about the portfolio allocations, what we're seeing, is everybody piling into the Gunlak idea of 25% of your net worth isn't a bad idea. And the Morgan Stanley CIO idea that the new portfolio is 60-20-20 and we've got 20% gold in it.
Yeah.
So
look, we did some analysis on the central bank just to put some numbers in perspective on it. But like if you took, because again, the central banks that are buying it's mostly Eastern European and Asia, right? Or emerging markets. If you look at the top 20 emerging markets central bank gold holdings, what they would need to buy to just match G7 central bank gold holdings is 6 years of supply. It's 24,000 tons of gold. So when you start, you throw these big numbers on, and you just do that. Like, how much does China need to buy in order to match Europe? How much does sort of Asia need to buy in order to match, let's say, G10, G7, G20? And there's so many ways to slice it, but it's multiple years of supply of gold. And you realize why there's just a stupid backstop on dips driven by central banks. Is this pricing sensitivity that sort of has been relentless.
I'm really kind of obsessed with the fact that this whole fire was probably unintentionally started by the Biden administration.
Look,
and I'm not looking to cast political blame, but if we want to say that it was whoever sanctioned Russia and claimed their 210, bill dog of holdings, that's what started this.
Yeah, I mean,
would you say?
I mean, the timing, yes. The fact that, we both sort of leaning on the fact that, Russia's invasion and the sanctioning of Russian assets definitely accelerated a relentless central bank bid that is still ongoing and has been accelerated by subsequent policy uncertainty, subsequent US. So, it's certainly, I mean, in essence, right, it's you're long gold and short politicians. You put it mildly and simply, and sometimes we overthink these things, but yeah.
Brilliant. I don't necessarily want to leave the gold conversation, Nikki, but I do want to ask you in the silver arena, mm-hmm. Can you just go over a little bit about the recent bout with local London tightness mm-hmm. that's been going on and what that's doing to the markets and what we can expect looking forward coming out of that? Yeah,
I think silver's a really good proxy or story for what's going to happen generally in most commodity markets. I think you got to be very careful about talking about global pricing and global stockpiles. And I think this regionalization of whether it's rare earths versus commodities, there's going to be a lot of dislocations between regions. So again, in a nutshell, the threat of tariffs drew in a ton of metal to the U.S. So, U.S. is studying super long platinum, silver, gold in expectation that perhaps these metals will be tariffed. And the sort of the knock-on effect is that you've kept now the linchpin of the OTC market is London, and you've kept that market now really short. So the spark to the India trade, the spark to the silver trade has been India actually. Huge amount. We're shipping huge amounts of silver to India. It's industrial, it's investment. It's going to silverware. It's coming in from all angles, and that has further obviously accentuated the London tightness. And now the market will it's a logistical issue. There's not a global shortage. There's a regional shortage, right? And so now the market will simply clamor to ship all that metal sitting in US back to London. And
we're going to throw it on the barge and we're going to get it over there, and eventually we're going to fill in that short.
Yeah, the interesting thing is, unlike gold and PGMs are flown, historically air freighted. Silver is like copper, you put it on a barge, but the dislocation and the premium has become such that it makes sense to actually air freight silver. So the participants are putting silver on a plane, which is just, spot next moved to minus 200%. This is worse than COVID, worse than, sort of any other 2011. It really is unprecedented.
Holy smokes. So now, eventually we're going to level off that location shortage.
Right.
And there'll be balance. What do you think is there going to be, do you think that there's a direct effect on flat price? Like, is the idea that this squeeze is over and that silver goes back down? Or are the technical forces of breaking through this crazy double top at 50, going to start that flywheel, and silver's going to have to catch up to gold at some level? What are your thoughts?
No, I think in short, watch out below. I think I think we're starting to see it. You can see the COMEX inventories sort of on a daily basis. So silver's leaving COMEX. It's only sort of 1/10 of what was put onto New York warehouses in the beginning of this year. So I think over the next week, next 2 weeks, 3 weeks, you'll start seeing sort of COMEX drain and filling up London. And I do think it's overdue a pretty big pullback. You can look at any kind of momentum indicator. We've looked at the overextension versus the 200-day moving average. Whatever metric you use, gold and silver are extremely overbought.
Well, I tell you, that's going to leave a horrible scar on the chart, one that I would guess that silver may never recover from if that it does become the case. Meaning if we break up above 50 and have any kind of a short period of time up here, say less than a month, and then we give 50 back and sort of have a serious large magnitude pullback, I don't think that the market will recover from that. I really don't, because that'll be 3 strikes at a historic level. I don't know how it gets through there. What do you think?
I think it depends on how deep the correction is. So I think, I'm sort of looking for more like up to 10%. So that's, like a $5 pullback, $400 pullback in gold. That is a healthy correction.
The bull.
And I think if you start seeing close to 15-20%, I think, yes, then it does some real technical damage.
I think silver could pull back to like 41 or 42, still be in the uptrend, and it would be fine. Yeah.
Okay. I mean, the idea is that'll be fine, except, you're going to have trapped and scarred money at the highs. And, it looks like, say the 50-day or the 100-day come in between 50 days at 42.70, 100 days around 39 3/4. So that's probably the mega support level in silver right now.
Right. Look, there are implications to these sort of skyrocketing prices, not just volatility. Risk management. You sort of pulls back, liquidity pulls back. In gold, your biggest. No one talks about it, but like the bear case, like you've killed off jewelry demand. Like that is 50% of the supply demand balance sheets. If you want to look at gold through a commodity lens, and China and India were down 30% in the first half of this year, and that was like sub $3,000 gold price. So what is jewelry demand going to look like in Q4 when it's 4,000? It's so for now you've got investment, retail, central bank buying more than offsetting the decline in jewelry. But at some point, if one of those sort of the key drivers sort of just takes their foot off the pedal, I think it's going to be interesting.
I think we're going to have a lot of platinum jewelry. Yeah.
So that's been the big benefit to platinum, and the big story behind, platinum re-rating from like 900 to 1600 now, was sort of the China restocking. And like, if you can get your pulse on China, and when they destock and restock, you got it. But, that your sort of Chinese wholesalers, you weren't seeing gold jewelry demand, right? And it would just made sense to switch into platinum. So I think the market is sort of keenly awaiting to see whether that restocking cycle, which we've just seen, is actually going to play out in Chinese consumer demand coming into the platinum sector.
Nikki, I don't want to, I don't go too deep into platinum and palladium investing because they're really difficult to trade. They're difficult for a retail investor to trade and have transparency with. But I do want them to sort of, I don't want to have our blinders on that we can't talk about it. So what are platinum and palladium? You said China restocking in platinum now. Is there a driver in palladium? Like what's the narrative there?
Yeah.
And do you think that these rallies follow along with precious metals? Have they just caught fire? Are they behaving like precious metals, or what's the take on that, broadly speaking?
Yeah, I think both platinum and palladium had the supply story, right? You've underinvested in the sector for over a decade. So you do have both primary and secondary supply pretty crimped. And in palladium, there's not much of a demand story. It is all auto. So if you think we're going to continue driving ICE sort of traditional internal combustion engine cars, there's a bit of a story in palladium. Palladium just doesn't have that investment, so that's where platinum gets to play. You've got where's the investment hats that sort of can attract the overflow from gold, and then it's got strong industrial jewelry and obviously the auto demand story. So platinum, look, no supply. Where the supply has to come from, it's got to come from. We're sitting with the metal in COMEX and in ETFs, and we've seen when deficit markets hit. Generally, the ETF can be the sort of supplier or lender of last resort. But again, this innate debasement trade, ETFs are accumulating. They're not. There are no redemptions, so it remains also structurally pretty tight. 1 month lease rates above 10% in platinum over the past couple months. Really, there's a shortage of metal. There's a real shortage of metal.
Yeah, so it would be foolish to sort of leave that trade out of your study of the gold and silver markets, right? Like it's very much becoming part of a similar investment theme that could go in any direction. So I agree that it's important to keep a close eye on what's going on with those kind of in the back seat.
Yeah, so I think I sort of like silver and platinum relatively more than gold. If you think we're gonna, if the Fed's gonna be cutting rates, you're going through this kind of reflation, kind of running the U.S. economy pretty hot. Like you want the high beta, real assets. Gold is sort of like your real, the world's coming to an end, like real haven. So I think from a macro perspective, I think silver and platinum are just more attractive as a sort of reflation trade. If that's your sort of base case.
Okay. Well, I am a obsessive stock trader, and so I want to know what you think about the miners as well, Nikki. Just today, BlackRock, I believe it was today or last night, recently, BlackRock came out and said Newmont's 140% surge could be just the beginning. Gold miners have never been cheaper.
Yeah.
It's hard to conceive that, consider they just doubled in price. But what are your thoughts on the miners here, Nikki?
I mean, again, going back to reflation, if that's your sort of macro backbone, you want the miners as a high beta play, not the physical. And I would add, I think B of A put out a pretty good chart where I think it's like one of the first times in about 30 years where we've got a low energy regime and a high gold price regime. So sort of one of the best environments for producers. Look, I don't cover the equity side, but yes, I do. I see the appeal. I think, for certain investors, it sort of makes sense.
Yeah. I mean, that the trade there is, if mutual funds decide to change their allocation from 50 basis points of gold miners to 5%, that is going to be, the elephants running through the keyhole and probably drive the price to a multiple of what the miners are at right now. So what are your thoughts on that, JD? Do you think do you think eventually we see that kind of a real rush where firms like all of the big mutual funds say, okay, this is a big allocation change and we got to get it on? What are your thoughts?
So I remember back in 2006 or 7, Vanguard renamed their gold mining mutual fund to Capital Material Mutual Fund. Like they rebranded it. Like they took gold out of the name.
Oh yeah.
I don't know if you remember this. And then they did it again 10 years later. So there's just been this revulsion towards gold miners over the last 20 years.
Yeah.
It's funny because I had buys of GDX in 2012 of $55 a share. And I bought all the way down and I've been buying for the last 10 years, but I've been underwater on those things, for 13 years. And finally it's in the money. Gold miners even after going up 150%, they're still cheap.
Yeah.
They're still cheap, you know?
Look, I think,
Nikki,
there was an executive order that came out in August, and I just think it's been really underappreciated by the market. But basically, it democratizes access to alternative assets for 401k investors. And the White House defines alternative assets. Obviously, it's private equity, it's real estate, it's digital assets, but it's also direct and indirect investments in commodities. And for me, it's like, okay, well, there's the green light for, again, sort of any of these, like it makes
Yeah.
sense and it explains it really, when you run a regression model and I can't explain why we are, where we should be, it's sort of this just sticky money in the allocations from whether it's 401 mutual funds, yeah, but just your more generalist crowd makes sense.
Man, sticky money. I mean, that's the name of the gold market. I mean, you think the Bitcoin guys have diamond hands and laser eyes. I mean, the gold bug guys, they're not selling. You know what I mean? They're the ones that are like, okay, the trade just started. You know what I mean? Like, get your popcorn out. We're going to be here
Yeah.
for a while.
Yeah.
And at some level, I don't fade that. At some level, they've been really patient, and then all of a sudden the floodgates opened. Like you said, it started with Russia. It built into I think, in my opinion, everybody keyed up on the fact that our deficit was spiraling up
Mm-hmm.
through 30 trillion, and every president, no matter what, spends more than the last guy. So all of this stuff kind of adds up to the trade that we're in now.
Right.
Really, really fascinating. Do you have a broad view on the S&P, Nikki? I mean, I would imagine you're somewhat bullish with gold miners up 130%, but do you have a broad view on the stock market just because I'm a stock guy and I'm curious?
I think it's, how I look at it is we're cutting rates. The Fed's joining G10 and cutting interest rates. We're not in a recession. Like, yeah, there's housing is not great and there are cracks in the labor market, but like given the amount of liquidity, there is not enough homes. And yeah, so you got to be long real assets and given sort of inflation outlook, and that's why the dollar's rallying because you've got ton of foreign investors sort of just piling in and have inspired the dollar. So yeah, constructive. Like I don't, it's everything's over frothy, but it's bubble territory, right? We got to figure out if you're 06 or 05 or 06 or 07.
Yeah, great point. Great point. Regarding rates that you said, with rates coming down, us not being in a recession, I want to plug the Macro Dirt podcast for a minute because Paul Tudor Jones just got a shitload of attention for saying Trump's going to get rates down to 2.5, 2.75. And we've been saying that on the Dirt Nap for 3 months now. Don't fade the idea that Trump is going to get rates lower. And that's been part of our bullish thesis in stocks and in gold. So that's why I'm kind of
Yeah.
bringing that point full circle now. I think it's very important.
Yeah, don't fade the Fed, don't fade Trump. It's you can't go against the policy. Like
Those are the guys in power.
Yeah.
Brilliant, Nikki. Brilliant. Is there a nuance to the gold and silver story or platinum story that I didn't bring up, Nikki? Is there something that you guys are talking about there at your offsite meeting that's super hot that we should cover or anything like that?
Yeah, I think. Look, we've touched on the big trends, and I sort of hinted at earlier. Sort of like there's been a notable demand for physical, and I'm not just speaking our book, but we're seeing it. And a lot of it was kind of kicked off with the SVB banking crisis. And you saw just a ton of private investors, if they would have unallocated gold, just turning and sort of switching into allocated gold. And I think that there's a sense of like you don't trust, whether you don't trust financial markets, you don't trust the government, you don't trust the imbalances. If I'm going to have exposure to gold, I want it physically backed. And so yeah, we're seeing and it's from mostly all regions, which is very surprising. So yeah, I would say yes, the demand for physical over some of these other more derivative products.
Are there massive premiums to the spot price that we see at the moment if you're looking to buy physical? Nikki, what's the story with that premium versus where it's been in the last year or so?
China's trading at a bit of a discount. So that's probably the one region that hasn't really been firing. But again, it's very volatile. Premiums pretty much across most retail products. Premium in the Middle East, huge premiums in Turkey. India is also trading massive premium, gold and silver. So again, at these price levels, we should be seeing discounts across all these physical regions, and we're not. And again, it is demand, but again, it's like sort of going back to it's a lack of supply. That secondary scrap, which maybe we see a wave of that come through with jewelry. But yes, it's just not coming back to market as quickly as what we'd expect.
Brilliant, brilliant. We've come full circle on the markets, essentially. Is there anything you want to ask Nikki, JD, before we go off markets and learn a little bit more about her?
No, I'm good.
No. Nikki, let's get to know you. We know what kind of music you like. I've seen you at one of JD's DJ gathering. So, well, I would say let's start with that. What kind of music do you listen to?
Oh, I'm a range. Sort of more indie rock. I can get into country. I'm not a Swiftie. Respecter,
I
but
love
yeah.
you for that. I love you for that. Fantastic. All right, I'm going to ask you a couple of other questions now. These are kind of standardized. They're called the 5 H's, but I'm just pulling 3 of them out to get to know you. First one, what do you hope for, Nikki?
Oh, just can people talk to each other without being so triggered? On both sides of the spectrum, and it's more sort of from a political standpoint. Yeah, it's and I think we're coming around to that, but more of that, I think.
Communication.
Yeah.
That's a beautiful thing. What has been a highlight in your life?
Highlights. Oof.
Yeah.
Being able to
These are
visit.
hard
Yeah,
questions.
wow. Being able, just the flexibility now was in banking, sort of like big grind. I used to go back to South Africa. I'm from South Africa, sort of 1 week. And you see my family, and now there's a lot more flexibility. And I think you sort of value that, sort of more of a balance, work-life balance. And so that's, being grateful for that.
Very cool. Something that's difficult to achieve. That's definitely a highlight
Yeah.
once you do. What do you find hilarious?
Hilarious. Stand-up comedy, like comedy show, like New York. Just it's the only way where you can sort of cut through, all the PC BS, and it's
Yeah.
just that's great.
Beautiful. Is there a particular comedian you like a lot or a favorite that you
Andrew
have?
Schultz has been. I saw him. He's been great. So yeah,
Who is it?
Andrew Schultz.
Oh, Andrew
Yeah,
Schultz. I'll check him out.
yeah.
Very cool. Very cool. What's your favorite vacation spot?
Safari going back. I was just in Africa. Literally did a half a marathon with lions, like with the like it was crazy. We had I just inspiring, and just that you just
Did you say a half marathon?
there was a full marathon and a half marathon, run, walk. You had 2 guys in front of you with rifles, 2 in the back. We saw lion, elephant, hippo. I mean, up like on foot. So just
Oh, congratulations. That sounds
no one was eaten. We came back all in one piece. It was done very safely. It was done for charity. It was called the Timbavati Traverse. And just I think conservation, getting back to your roots, and it's
You actually got to be careful with the hippos. A lot of people don't know that hippos are way more dangerous than lions.
number one killer in Africa. Everyone's afraid of the cats, like the lion or leopard. Like, as long as you don't run, then you pray. But it's the hippo. They're so impatient, very territorial, and they'll just chomp you in half. Yeah.
I'm afraid of all of them. So I run from everything like that. Totally
Yeah.
agnostic. Yeah. Bigger than a dog, I'm gone. What's your favorite analog activity?
Analog activity.
No phone in hand.
Oh, hot yoga. I play squash,
Really?
but I'm just so injured all the time. That's sort of my relatively less expensive way of getting therapy and kind of surviving New York in the markets. But an hour of like hot vinyasa or hot yoga.
Brilliant, Nikki. JD, do you have any questions for Nikki?
No, I mean, I hope if I ever do another gig in New York, you'll make it.
Oh yeah, no, I'll be there.
Okay.
I'll make sure I go to buy Nikki drinks, so we'll both be there for sure.
Great.
Absolutely.
And hopefully we're not sitting at $10,000 gold.
Yeah, right. That would be interesting. Well, Nikki, listen, I can't thank you enough for joining us today. You are exactly what the market wants right now, and that's why I continue to retweet you. Where can we find you? Tell our listeners that.
If you're more of a retail investor, definitely appmax.com. That's where most of our retail products sort of are produced. MKS PAMP.com, and then I'm on Twitter, NexaSA84. So, yeah.
Got it. We'll post your Twitter handle. Everybody should follow Nicky Shiels for some of the best information in the metals markets on FinTwit, in my opinion. I can't thank you enough for joining us. This has been brilliant, and I can't wait to have you back on again so we can see how this conversation looks in the rearview mirror. I'm sure we're going to look pretty smart no matter how we slice it.
Yeah, awesome. Thanks, guys.
Once again, thank you again for joining us, Nikki. You're the absolute best.
Thank you. Thanks, JD. Thanks, CG. Bye.
Peace out, everyone.
Cheers. Bye.